Hello. That was really fun, wasn't it? I was kind of, it was sort of blown away by kind of the speed dating thing. And by the way, we didn't necessarily get to every startup out there. You know, we pre-screened them looking at the website and looking at the information beforehand. And so we were kind of trying to hone in on the ones that we had questions for. The other thing I just want to emphasize again, you know, at least for me, and you know, we were looking for kind of the intersection of, yeah, this is an interesting company with this is an interesting conversation to have. For example, it was one company that I thought was very interesting, but I found that their answers were, well, we can't really talk about that. And I was like, well, the whole point is to talk about it. So, because you're kind of getting a live VC interview here. So, you know, things like that may be an issue. And really, again, the goal was to sort of figure out that intersection of interesting company, interesting conversation. And there were so many interesting conversations. Fred and I were just talking about how wonderful it would have been, and then maybe we'll do that next time, is to actually have a live cam go around, because we had, you know, 20-odd fascinating conversations. It would have been great to have a live stream of those rapid-fire conversations. But you're going to get a little taste of that here, and obviously if you were sort of leaning over the table at the same time we were, you got a little taste of it then too.
Yeah, I thought that was great. There was always 3 or 4 people who were just there while I was talking to the people behind these projects, and so I thought it was a good opportunity for people just to see how it goes. The other thing that I would say is amazing how much information you can get in 5 minutes.
Yeah, absolutely.
It just blew me away. I learned so much in 1 hour about, I think I saw maybe all but 4 or 5 companies, and I apologize to the 4 or 5 I didn't get to, but we got the hook.
Yeah. And I have to say, I think it was a lot of fascinating companies there. I was sitting here, I wanted to talk a little bit about our thought process, or at least my thought process, and you could do the same, in why certain companies were interesting to me. Maybe I can do that without kind of trying to bias the voting. I'm a little worried about biasing the voting. But some of the issues that I sort of saw that came up, you know, for example, SaneBox. You know, fascinating discussion that we could have about what's it like, you know, when you've developed your company and then, you know, last week or 2 weeks ago, Google came out with something that competes directly with your product. You know, it's an experience that entrepreneurs have all the time. You know, how do you respond to that kind of competition? That's sort of an interesting conversation. You know, in the case of another company, Nama, I found myself fascinated by how little I understood the business from what I had looked at before. You know, and that's sort of like a whole exercise in how do you work with an entrepreneur to improve their pitch, you know, and to explain the business better. You know, in the case of you know, BBuzz, I thought, wow, there's a really interesting discussion here about how this aligns with an interesting long-term internet trend of self-service. And here's a market that has not actually been exposed to internet self-service. How might that turn out? You know, Credit Coach, I don't want to bang you guys too hard, but I have to say I was put off by the jackets. It was sort of echoes of the dot-com boom and subsequent bust. That's not how you do marketing today. And that was sort of interesting. In the case of Hourly, I had a really interesting discussion about both sort of the you know, like why now, this demographic trend driver, and also sort of the race conditions around how do you build a two-sided market, and how does that actually, you know, how does that actually work? So there's all these fascinating potential discussions.
Right. A couple that come to mind for me. I really liked. I'm trying to come up with their name now. It's the company that does the face recognition. It's the biometric
tactical information.
Tactical information, and what they do is you upload 4 photos to the web, and then once you've done that, you've created effectively a biometric profile, and then somebody could identify you by just taking a picture and submitting it, and a match is made. Yeah. And they're going after that market by dealing with people who have issues around wandering, Alzheimer's patients and such. to me, I said, this is Shazam for faces. It seems like a huge idea. I'm not sure why you would, go after such a narrow market with such a big idea.
I'll argue that. I remember once having a conversation with Rob Ryan, the founder of Ascend, and he said the best businesses are like sunflowers. They got this core, and they got lots of petals.
Right.
And you start by going after one of the petals, and then you go after another petal, and then another petal. And it could well be that this gives them a chance to test their technology in a very narrow niche market and understand how well it works.
Right. The reason that we decided, these are companies that we're not. Are we already telegraphing what we're going to do here?
Probably a little bit. I would go over a couple of the others.
Okay, cool.
Do you have any others you want to talk about in that regard?
Well, storage by mail to me was interesting. I thought that the utility was really quite great. All I need to do is just tell them, they send me a box, I put a bunch of stuff in the box, give it to the postman, and it's gone. But ultimately, it felt to me a lot like a real estate business. They're just going to end up running a bunch of warehouses, and honestly, I tend to be more attracted to businesses that scale with technology as opposed to with real estate or something else.
Yeah.
So even though I think it's a great service, I would use it.
Yeah.
Probably not going to invest in it.
Yeah, I think that's a kind of interesting question. Another one that I thought was really interesting for me to talk to was Outlier, because they're selling real products that they're making. It reminded me of my own company. I started my company with $500, never took venture capital because I was selling something that people actually wanted, and they were giving me money from it from day one.
Yep.
And so I said, why do you need venture capital? And they go, well, maybe we could grow the business because they're already profitable. And then the question becomes, well, how would you grow the business, and what would you use it for? And of course, we're both early stage guys, and they're already kind of going along, and we're not really growth capital investors. So that's kind of an interesting lesson too, which is, how do you match up the company and its goals with the style of VC, that you're talking to?
Well, there's also an element to that, which is that there's a fashion component to that business, right? You and I were saying, well, we like jeans, right?
Yeah.
Well, we do like
really?
jeans, obviously, but plenty of people don't love jeans. But it's just that's a fashion.
Yeah.
You have to have some fashion sense to be able to invest in that.
Yeah. So another one that I found just, again, really interesting, that we had a very short conversation, was Social Bike. I think of all the businesses out there, that's the one I would most like to exist. And it looks like it has a lot of hard problems. There's a class of problem in sort of scaling a business when you really have to get a two-sided market going, and you need enough bikes out there with this technology, enough customers. How do you make it work? So this, and I didn't have a sense that there was enough sort of deep thinking about how they get over that hurdle.
I had the same question with the Roadify. It's crowdsourced parking and mass transit data, and of course you have to have enough people who are taking the buses and the trains and on the streets to give you the data that makes the service useful. So you have this chicken and egg problem.
Yeah. So are we ready to actually take one of our picks?
Yeah, I think so.
And by the way, you guys, I trust, have been texting your picks to vote. I'll be interested to see who you guys pick. So go for it, Fred.
My pick is Glimpse for a couple reasons. One, because I put the application on my phone today as I was doing my homework, and I loved it. I said, this is instantly useful for me. I know how I'm going to use it. I also really enjoyed the presentation. When I got the presentation, the person who was presenting was, I thought, very credible, intelligent. And finally, they have that same issue, in my opinion, that SaneBox has, which is that they could be a feature of someone else's service. And I thought that would be an interesting discussion to have. So that's my pick.
Okay, good. So are we ready to have Glimpse come up and talk to us? Yeah.
We got stairs. All right. And you are Brian. All right.
So actually,
excellent.
Look at that. That slide right there is, says a lot about one of the things that I think both Fred and I do use as a criterion, which is it on trend with some big theses we have about where the future is going. And if you haven't read Fred's post on thesis-driven investing from last year? Mm-hmm. You should read it because it is sort of absolutely on point about how a good investor has a vision of where the future is going and then looks for things that match that vision. So mobile, real-time, social. I think we're 3 of your...
Yep.
Okay, so Brian has a minute to give us a pitch so you all know about Glimpse 2, and he's going to sit down and chat with these guys.
All right, great. Well, Rick, thank you. Very excited. We knew there was a good fit because we see those same trends, mobile, real-time, social web. I want to go into each one of those and talk about how we think we've solved that problem with Glimpse. The whole goal with Glimpse is to let you share your location and solve the 2 big problems, and that is ease of use and privacy associated with it. So Glimpse is a mobile application. You download the phone. We don't have to worry about a critical mass problem because you could be the only person in the world with that phone, with our application on it, and it's instantly usable. There's no password, there's no sign up. Just pick a person you want to send a glimpse to, hit send, it'll go to their email or to their text messaging, and they'll have a link that they can click on and follow your exact location for a set amount of time. So privacy is not an issue. There's no network to sign up, make friends with, dissolve, but it allows you to show your location in situations, because we think location sharing is a situational event that nobody's really solved yet. So it's real time. When somebody gets that link, be it on their desktop, on a phone with our application, or just a phone that has internet access, they'll be able to click on it, see your real-time location, refresh it, and get your up-to-the-second location up until the time limit when the glimpse expires and dies off. And then Glimpse is what I call the frictionless social web. What's the biggest social network in the world? Everybody says Facebook. No, it's really big. It's not as big as your phone book. It's not as big as the email address space. We think you should be able to share your location as broadly or specifically as you want. A specific phone number, a specific email, or if you want to go public, you can send a glimpse to Twitter, or you can send a glimpse to Facebook. Again, with just a couple key taps. If you send it to Facebook, it'll expand inline. You can see real-time location sharing, again, for exact amount of time that you wanted to share it with. So for location to really hit the mass market, we feel that anybody has to be able to use it. It has to be as easy as sending a text message, and it has to have no privacy constraints. So we don't have to deal with the reminders and the back and forth of privacy because it's built into the application. We looked at the time element, and that makes it transactional, and that means that you can use it with your closest friend or a distant stranger or a taxi cab driver or anybody to solve these everyday situations that we all hit multiple times a day of how do I share my location with somebody else in a rich, visual, interactive way.
All right.
Why don't you come over here and have a seat and let's grill you a little bit.
So Brian, we're going to start with the question that Tim and I really wanted to get into. When I saw this application, put it on my phone, used it, I said, this is Latitude done right. Okay. Most of you probably know Latitude is a feature inside Google Maps where you can broadcast your location. Unfortunately, you're broadcasting your location all the time, and it's a huge privacy issue. You fix that problem by giving a time decay and making it, I'm sharing it with my wife right now for the next 30 minutes. I think it's a fantastic insight, but probably not that hard for Google to copy. They could probably add this feature Latitude very quickly. How do you think about that risk to your business?
It's a very good point. And it came to a point you mentioned, I think, yesterday at the keynote. You have to build your product for where things are going to be by the time you ship. So there's a technical aspect of Latitude and other folks out there. Wow, I can share location with my phone. We wanted to fast forward ahead to what's that nugget that makes it mass market and approachable. We predicted Google would do what they did, and I think they will continue to, because if you look at what Google and maybe Looped and Facebook, these guys are in a battle to create the largest closed social network that they can, and that's where they get their value from. I'm ex-Microsoft, and that's where they got their value from. And so they want to solve it by making it part of the advantage of being in the Google network with your Google account, is that we've got a bigger user base than the competitors. And so we have this ability to kind of zig and zag and be much more open, work across all handsets, work across different social networks that we don't have to compete head-to-head with. So my prediction is Google's going to continue to go down the path that they're going down. We're going to continue to innovate, move on other phones, add new features into the existing phones, and not have to have this problem of if your only tool is a hammer, all your problems look like nails. So I think there'll be
I don't know, though. I just want to be a little bit push back on that. And I had this same sort of conversation with Sanebox. and by the way, I love Sanebox, and I'm really eager to try it and see if it does in fact work better than Priority Inbox, as you guys say it does. And you said that you have people who are coming back. But you don't have to be the best if you have massive market share. You know, there's company after company that went up against Microsoft with an arguably better product. But, you know, you're attacking uphill. You know, sort of like if, you know, Google Maps is on, you know, all these phones and they add Glimpse-like features.
It's a fair point,
you know, you've got actually somebody has got to download, adopt, and
yeah, absolutely. Now, one of the nice things about the mobile ecosystem is it's a very schismed feature of you have a lot of 800-pound gorillas, from the OS to the hardware to the social networks to the mapping technology companies. And Google has large shares in each of those, but you'll find that there's a lot of very willing partners that allow us to do things that Google couldn't do. Microsoft did very well at squashing of having larger market share than other companies and leveraging that. But then they got to a point where people didn't want to partner with those guys.
No, I understand. That kind of gets us, though, to the question there. You know, so let's assume that there's this huge consumer adoption of your product. How do you get paid? You know, how do you make your money?
There's a couple.
Because, of course, that's where partnerships really happen around, you know, mutual value to both players.
Absolutely. So we've really got a two-pronged approach with what we're doing. We have the application which shows off the technology, and that leads to our viral adoption that we've got out there, because you send a glimpse, the receiver doesn't know who we are maybe, they click on it, they're experiencing it, they can download it. So we have that viral adoption piece of the application. But we've also, and being ex-Microsoft, we have this build on a platform API that for these partners, and this is what's so fun. I present there, and everybody that comes has a different idea of how they would like to integrate Glimpse into what they're doing. Oh, I've got a car ride-sharing application I'd like. Oh, I'm taking the buses around New York Times Square. I never know when the next one's coming. If those guys could just send a glimpse for when it shows up, that would be really cool. Oh, there's B2C plays in here. I want to know when the cable guy's coming to my house, or when the UPS guy's delivering, or when the taxi cab guy's coming. So you have a lot of, and to your point of the API piece earlier or yesterday, there's a lot. We have an API programming interface that I think will find itself a lot of scenarios for people to integrate with, and then partnerships that can get the distribution on the scale of a Google.
But you didn't say how you were going to get paid, and I don't think you're going to charge people for access to your API. It didn't sound like that's what you want to do.
Not to the broad consumer market, no, or the kind of the hobbyist developer.
So let's say you've got 1 million people using Glimpse every day.
Yeah.
How are you going to make money?
So there's two pieces. One, we'll roll in some of the location context-sensitive advertising, which I think is coming along well. It's not there yet, but I think the trends are very positive. And we have this aspect of being real-time visual maps with a destination. And the nice part is on the receiving side, actually, and we've seen this in our numbers, is when you have an advertisement and you're sitting there waiting for somebody who sent you a glimpse, you've got a much higher click-through rate probability. So I think there's stuff associated with that.
People are sitting there waiting, twiddling their thumbs, waiting.
Looking at your map, watching you move 8 miles an hour, and they're like, they might as well click. So I think there's a play to be made there. And then I think there's a play on a licensing to some of the larger 800-pound gorillas that do want to integrate this technology and differentiate themselves from what else is going on, or play in that space and being able to ride the ways that they monetize it.
So let me ask you another question that has to do with success. One of the things that we've seen with Twitter, with Foursquare, even with Facebook, if you're successful, you've got to run like crazy to keep up with demand. What are the scaling issues around Glimpse? Talk to us about sort of the technology back end, and if you're really successful, what demands does it put on your infrastructure? What do you have to build for that?
It's pretty large, and it was something we took a deep breath about when we jumped in, because it is partly a technology play. And I think you'll find it's like Twitter, but more difficult at some levels, because you've created a dynamic, real-time, back-and-forth communication mechanism across things. We spend a lot of time on our server architecture to make it scalable.
So my phone is broadcasting my location every how many seconds?
Whatever. It's adjustable, and we change it, but
right
at peak time, if somebody's watching you actively and you've got it as your foreground application, about every 7 seconds.
Will it suck down the battery?
It will in that scenario, but we've got some stuff actually that's in the next version, it's going to be
So
really
kind
cool.
of when you're saying it's like
Yeah.
Twitter, only more so. Twitter has raised a lot of money
Yeah.
before coming up with a revenue model.
Yeah.
So one of the things you're telling us is this is going to be a fairly high sort of capital investment before we even know whether we're making money.
I'm very upfront about that absolutely this is an investment time. We think what we want Glimpse to become is that noun and that verb for all these daily occurrences of sharing your location. We want people to say, oh, send me a glimpse so I can come down when you arrive. Or, hey, kids, I'm coming to pick you up. Here's a glimpse. Right? Or I'll meet you at this restaurant, business partner. Here's a glimpse. Or I saw your glimpse today. We think that there's an opportunity to kind of grab that
So
market.
with what kind, the kind of infrastructure you have now, how many users can you support?
Right now, we can support about 1 million users.
Okay.
You're going to have that soon.
Yeah, I hope so. I hope this
What do you
helps.
have now? You said, what, 300,000 was it?
Yeah, just over 300,000.
Yeah, I think this audience here is all going to run out and tell everybody else what a great app you got.
Please do.
You have other questions?
No, I think we probably need to move on. We got
No, I think this is just for, I hope this is just for this segment.
Oh, it is?
Yeah. So we got
okay.
another
We
minute
got a couple
to
more.
do.
Okay,
Yeah.
so
Yeah.
is your whole distribution strategy word of mouth? Is that the whole thing, or are there anything else you're doing to try to get more distribution in the Android store, in the iPhone store? Do you have any strategy around that?
Yeah, there's a couple things we realized when we launched the company. A, we're not going to create a social network that's bigger than any other social network out there. So we shouldn't have an application that tries to out Facebook or out Looped or out Foursquare. So we want to be generic on that. And then the second piece was, let's take this thing in stages and get larger partners. So we built the prototype on our own dime. Then we went to Angels and said, look, here's the prototype, here's what we want to do. We use that money to build the beta and the release product. Now that we have a release product, proof of concept, some scale, it's easier for us to go to these larger partners that can help on the distribution and have that, because the viral aspect I don't think will be our long-term solution.
Yeah, by the way, one of the things that you just illustrated there is a really, really important concept when people are looking for fundraising, which is, what do you accomplish in sort of a stair-step way at each level of funding? Because, particularly these days, you really do want to see that somebody has actually built something, it works. In the old days, you would maybe fund on a plan and an idea. Now you really tend to want to fund on something that's working, and you identify a particular set of problems that, this is what I'm funding now, and you clearly understand that.
Well, I think the way you've done it is the ideal scenario. Bootstrap it to the point where you actually have something you can show an investor, get a little angel money in, use that to get something launched, demonstrate that you've got a real product. You're 300,000 users now. That's a real business. I mean, I'm not saying it's a real business, but you can finance that business.
Right.
Yeah,
And
it's
so,
a real opportunity. Now your next stage is to turn it into a business.
Yeah,
You've turned it into a product, and now it's to turn it into a business.
Exactly. We wanted to walk into the VCs saying, listen, we've proven out the architecture, we've got our technical chops, we can look at the viral aspect. Now, but to your point, if you want to take a ride with us for a while till we achieve those revenues, come along and take the ride.
All right.
Okay.
Fantastic.
Thank you.
All right.
All right.
Well done.
Thank you. All right. Thank you. All right. Thanks a lot. All right. So our next pick, I guess this was my pick, and I really struggled because there were sort of companies that I really love, and my goal here, as I have said repeatedly, was not to pick the company that I thought was the best investment. That's usually what these things do, and maybe there's something that companies really hope to be picked for that reason. But I wanted to pick companies that illustrated really interesting problems. And so this sort of how do you compete with Google was one of those problems. The other one was just understanding the numbers, because in the end, a business is about getting paid. An idea is not about getting paid, and there's lots of products that you want to have exist, and in a perfect world, you could just do them and people love them, and that's the end of it. But in the real world, you do have to get paid. So I was really interested in talking to Food 52. Because we had a really interesting conversation about their business and their product, but they didn't have their numbers at the tip of their tongue. And I wanted to push them a little bit on that, and I thought it would be fun to do on stage, although I gave them some warning that if I picked them, they better have done their homework. So please welcome up Food 52.
And while Amanda's coming up here, I want to make a disclosure here. My wife is committed to invest in Amanda's angel round. for that reason, I would not have picked Food 52 because I think that's a little bit of a conflict. But this was Tim's pick. I didn't influence it. So.
Oh, come on! I was just trying to suck up to you, Fred.
Well, that's okay. If that's your strategy, it's a fine one. But I did want to tell people that because I think it's important for people to know these things.
Yeah.
Thank you.
All right, great.
Great.
Why don't you present the company here?
Let's introduce yourselves. And you got
great.
clickers right
Hi,
here.
I'm Amanda Hesser,
And I'm Meryl Stubbs.
and we're the co-founders of Food 52. And so, there it is. Okay. All right. So we have our mission is to create the world's most passionate, engaged food community, and we want to connect like-minded foodies and provide a curated resource of all things food. And ultimately, we want to establish an integrated e-commerce platform for food producers and consumers. How do we?
Oh,
we
yeah.
pull the slide?
There's a thing right in front of you.
Oh, there is? Okay.
No, yeah.
There you
Okay,
go.
sorry, I'm new to this kind of presentation, so I'm a little nervous. So we have traction. We've done a proof of concept. We have 135,000 uniques per month. We have sponsorships from Viking, Williams-Sonoma, OXO, and we have book deals with HarperCollins. And an interesting statistic to us is that we have 30% of our visitors come back twice or more a day. We see ourselves actually much more allied with other kinds of sites, not just food sites. We see ourselves as a vertical social platform, and we sort of think of our future as the Etsy for food. And the way our model works is build community and then monetize it. And so we monetize it in several ways. First of all, we have these book advances, also through ads and sponsorships, which we currently have, and soon we'll be adding the e-commerce platform.
All right.
Okay, is that the end of the presentation? And come on over here.
1 minute.
Okay, great. That's super. Okay. Yeah. Okay, and hopefully a bunch of you saw the site. You got a mic behind you.
Thank you.
So I'm going to ask you the question that I was asking you there on stage, which is, how big does this have to get before your economic model works?
It really starts working at like 1 million uniques, which in our plan would be 14 months out.
And according to our growth rate that we've been experiencing.
So do the math for me, though. I mean, so there's ads.
Yes.
Right? And the ads are coming from ad networks.
Right now, yeah.
Right now, yeah.
Mm-hmm. And we work with a luxury ad network, which has been giving us really good CPMs. And because we've got sort of a quality level that we set out from the very beginning in terms of our content, we actually enjoy really high CPMs because
So
we attract a certain audience.
Yeah, and then so then the next piece, I know you have that on the slide,
Yeah.
your actual commerce sponsorships. Explain to us how that works.
Yeah, so soon we'll be adding group sales, first nationally, things that can ship. They could be tabletop, cookware, and artisanal food products. And then we would, over time, we'd start doing like one sale a week because our numbers are now, we have 135,000 uniques, but we probably can't, support a daily sale quite yet.
So
and
tell
then
me
we
how
build
this,
that up.
this is an e-commerce thing where you're actually, identifying products that will appeal to your audience, that a company, say, we're doing pies today, so we're going to, I don't know what
Sell
you
a
sell.
pie plate.
What do you sell with pie plates?
Yeah,
Okay,
exactly.
okay, pie plate.
Yeah, they'd be highly curated by us, and then we would, they would be sales for, say, in the beginning, 25 people, and we'd be giving them a discount or an exclusive. So it's not just like Groupon.
No, I understand. This is where I started to lose you
Okay.
when we were talking earlier,
Okay.
because I start thinking about this and I go, well, okay, you got 1 million uniques, let's just say. How many people, and you out of those 1 million uniques, how many people do you think are interested in any particular product that you're going to have on offer?
Well, I mean, we've mapped out early on sort of 25 people taking a deal, but moving up to probably, I would say at about the million mark, it's sort of more like 50 people taking a deal. That's the assumption we've made.
Okay, so 50 people take a deal, and the average deal size is?
You mean price-wise?
Yeah.
It's about $50.
Okay,
And then
so-
about 17 deals per week.
Just give us a sense
Okay.
of like, what would I be buying for $50? I'm buying food here, right?
Okay.
So what would an example of something be that I'd be buying?
Well, it could be a paella pan, for instance.
Oh, I see.
Yeah,
So
it
it's
doesn't have-
cookware.
Yeah.
Yeah.
Could it be actual food?
Yes, it could be. And actually, by the time we're up to 1 million uniques, we would have localized it. So in major metropolitan areas. So for instance, it wouldn't just be actual products. It could be a cooking class. It could be a wine class. It could be a food event, a festival. Tickets to a festival. And the idea is really, tapping into all the energy around the localization of food.
So, again, I'm just trying to
Okay.
press a little bit on this.
Yeah,
sure.
You got this
Please do.
$50 product that you're selling to 50 people at 1 million uniques.
Uh-huh.
So that's $2,500. The margin on that is
25%.
okay.
Yeah.
So you're going to get, $600, and you're going to do this how often?
17 deals a week about at that point.
17 deals a week, so $600 times 17 is about $10,000, so $40,000 a month. So $400,000 a year. What does it cost you to actually, get those deals? And to find the product, source them, make the connection, with the vendor. I mean, how's all that going to work? I mean, I guess what I'm really trying to get at here is there's things that you can do, and again, for me, I ask, is that really a good business? And a good business, I mean, there's two kinds of good business. Paul Hawken once said a good business is a business with interesting problems, and a bad business is one with uninteresting problems. And that sounds like a really uninteresting problem to me.
Actually, there is a really interesting problem in food.
Okay.
Actually, and
but it's more like sourcing all those products at relatively low margins. To come up with 17 interesting products a week that match with your and go out and find them, make the deal with whoever supplies them. Again, how are you going to handle it? And maybe it is somebody who says, oh yeah, here's a supplier, Williams-Sonoma is going to be our supplier for all this stuff, and it's just we've set up the relationship and bang, we just click. But without that, I'm just trying to understand how that works in real life.
Okay, well, I think that just to take a step back, we love food.
Yeah.
Okay, and we are surrounding ourselves with people who are totally passionate about food.
Yeah.
There's been a food movement, a food revolution in this country going on.
Yeah.
And it's like, that's really what we're tapping. We want to aim for those people who actually, it's not only just about buying that product, it's actually about supporting their local food producers, their local food community. Because there is actually a social
I love that about
element.
I mean, but that drives the size of your business.
Yes.
The size of your audience, the
Yeah.
size of the people you reach.
Yeah.
But it doesn't drive the economics of. And again, I'm not saying that the economics won't work. I just want to understand how well you've thought them through. Because there are a lot of things that you can do, and they just, it's just like, wow, it's a lot of work for, relative to the amount of money that you get. And again, maybe, so then the question is, okay, if that generates $400,000 a year, that's nice incremental revenue. And if you get to 10 million, uniques, it's 4 million. Is that a good business still? And again, so I'm just sort of trying to push you on your business model and where the revenue comes from. And it's really good to experiment. And I you may be right, but I've experienced this around my own company where, there's just people who just aren't doing the math of how much work it is for $1 of return. So just want to make sure you're thinking about that.
Yeah, definitely. I mean, I think once we continue up above 1 million uniques, I mean, at 3.5 million uniques, which is in our financials would be the end of the second year, then you're making $250,000 a month. Still, it may not work.
Yeah.
But our thinking, the mapping out that we've done, and also we've taken a conservative view compared to, for instance, the group buying companies, which take a larger share. And it might be that once we get bigger, we can
get more leverage.
We can get more leverage. But we tried to sort of look at the numbers with a conservative view in mind.
So I've been dominating this. You got to ask your questions.
You had a good line of questioning there. A related question. This is going to be the numbers-oriented conversation. how much capital will it take you to get there, right? Because if you have a business that can do $3 million a year revenue, but it only takes you $200,000 or $300,000 to build it, that's not necessarily a bad thing. It's not going to be good for a venture capital firm that wants to invest $3 or $5 or $7 million, but it might be a very good thing for a group of angels. So do you think that you could get to those kinds of numbers, 1 million uniques or 3 million uniques, on a relatively small amount of money?
Yes, we do think so.
How much are you trying to raise?
We're raising 750.
And that'll get you to?
That should get us through,
month 14.
Month 14.
But,
if we find that the sort of pickup
And
with...
at what month do you break even?
Month 14.
Okay, so literally that might be all the money you can raise.
We've got it down to 0. Like, we have 10 cents left.
This is the last round. How many times have you heard that? This is the only round of financing they need.
No, I mean, obviously we know that if things really take off, which is what we hope, then we'll need to raise more money. But the other point, too, that I just want to go back to is we've just been talking about the e-commerce piece for the last couple minutes and just doing the math for the e-commerce piece.
Yeah.
But the advertising and the sponsorships also
Yeah.
increase
Will
quite
increase,
significantly
Yeah.
so they supplement the revenue.
And the other thing that we also didn't even get into is that, like, what we see is kind of like our third phase of our commerce plan, which is where we give our community the tools to create sales locally, which could scale anywhere, and then removes the cost of a salesperson.
Yeah. The other thing I would just sort of say about any e-commerce business is, one of the questions in any business is, where does the leverage come from? And I think in any e-commerce business, the leverage comes from bestsellers. It's not true. I mean, Amazon gets leverage from the long tail, but yours doesn't sound like it's terribly algorithmic and long tailish. It sounds like it's going to be driven by your ability to come up with, offers that are sufficiently good that, like if your average is 50, all of a sudden you sold 1,000 of this one.
Yeah.
And so, just think about that and how you actually are going to start increasing, because it kind of comes back to another thing, like when you really understand the drivers of a particular piece of your economic model, then you understand what you need to measure and what you need to drive, So in this particular case, I still remember early in the internet boom, must have been 94, so I went to QVC.com in 95, and they had this, they were monitoring in real time the call flow in their call centers, and they didn't stop when nobody was buying anymore. It was when the rates started to fall off, right? So somebody would just go on and start blathering about this particular cubic zirconia, and they were monitoring just like when the trend, the graph started to flatten, and bang, onto the next product, and they rotate the sound stage, and bang, because they really knew that there was a particular yield number that they were going for. And I would just sort of really advise you to kind of really, if you're going to make e-commerce a big part of it, you want to get really good at it, and you want to be trying to figure out how to drive that number. All right?
Great. Thank you so much.
You're very welcome.
Yeah.
And good luck with the business. I mean, clearly food is an area where people are passionate. There's cookbooks and so forth. It's been a business for years. There are foodies. I totally agree that you've identified a passionate niche, and where there are passionate people, I think you can usually build a business. So,
Great.
Good luck to you.
Thank you so
Thanks
much.
so much.
Thank you.
All right.
So the next one is the pick from all of you.
And we've got it down in the monitor for you guys to announce.
Oh, okay.
Go ahead.
All right. Looks like we are about to hear from Hourly.
All right. Hourly, come on down.
Good pick. They were definitely on my list of somebody. Actually, there were so many people I would have loved to talk to up here, and even though I was the one who said I wanted just to pick a couple for more in-depth quizzing, I kind of wish we could have done like 15 of them.
Yeah,
it was so much fun.
And then I would have passed out.
Yeah. All right.
All right, hi. Introduce yourselves, and we've got clickers for you right here. Thank you.
Fantastic.
Wow, thank you. We're Hourly. My name is Brooke Dixon. This is my wife, Lynn.
Thank you.
I'm still kind of shocked over here. It must have been the coffee.
Yes, thank you, everyone.
So basically, Hourly is an employment network for the gig economy. Our goal is to get as many people and as many individuals jobs or to fill a job as quickly as possible. to make that process safe, efficient, effective, economical, and useful. So I actually don't remember what we put in here.
I mean, one of the things that we've found over in the past year is that this number has grown from approximately 50 million people who are considered temporary employees, hourly, contingent, and freelance. It's grown to 75 million people. And in that time, people are willing to do more and more jobs that fit outside their normal job description. So, which is why Hourly was born. It started with the food hospitality industry, where I was constantly hiring people with really diverse backgrounds, and it has grown since that for people who are looking to do and fill a number of jobs based on their availability, location, and a number of other criteria. And it's really trying to find an efficient match between employers who are looking to hire those types of people in a market where they can't often hire full-time employees. And God willing, as the market continues to get better, we hope that all these freelance and temporary positions will turn into full-time hourly positions, because as many of you, I'm sure, has worked freelance in your lives, freelance stinks.
Exactly.
So
the first lesson is to listen to your wife. This was actually Lynn's idea, so for all you married guys out there, pay attention to what your wives have to say. And basically what we're doing is we're just a big matching engine. You hear from a lot of people, and we've spoken to other employment sites who, they say it's the match.com for employment, and that's,
we'll take that.
That's what we'd love to get to. We think we're more of the plentyoffish.com for employment right now, which is just a big, sort of the potential for a big network of people looking for work, and we're working to sort of...
With good VC funding, we'll be the match.
Yeah.
All right, come on over and take up your handhelds. So, do you want to start, Fred, or shall I?
Yeah. When we were talking at your booth, you said that this activity has traditionally happened on Craigslist, and you were inspired to create this service because of your frustration with that. So what are the pain points for the employer and the employee with Craigslist, and how do you solve them?
And thank you. I mean, it's not just, I think it's Craigslist, but what we're trying to do is take the traditional job boards and kind of turn it on its head a little bit. The hardest thing from my side in hiring through Craigslist was sort of the anonymity of it all, is you were doing a lot of work and talking through text to try to gauge who this individual is on the other end. And in a lot of cases, I was right. In a lot of cases, I was wrong. And what we're trying to do is get those people further along the process by being able to put up photos and backgrounds and do background checks and what jobs they've done in the past. And education is they're starting from a much further point. And for the hourly worker, for the hourly employers, is that they don't have time to waste. It's work to find work, and it is work to find employees, and neither side have hours to waste. So what we're trying to do is create an efficiency here for looking for people and for the job seeker to find jobs in an efficient manner where they can be searched on an ongoing basis.
So it's a little bit like if you mashed LinkedIn and Craigslist together, you'd have something akin to what you've built.
You become hourly.
Yeah.
Okay.
Yeah, so I had a couple of questions that we talked about when I came by your booth, and one of them was, how do you bootstrap this thing? You've got to get employers and potential employees both to come to your site. It's a classic two-sided market, and it's not clear what the drivers are, how you scale. Craigslist got started in a few cities with, kind of a pretty close duplicate to something that already existed in the form of all of, white pages ads in newspapers and, so on. So, and it wasn't started even as a business. It was literally just kind of, one of those early funky internet things. Whereas
Sure.
What evidence do you have that you're going to get past that two-sided market scaling problem?
Can I take this? It's the common question. We get that from everybody. What we did is we identified one, basically vertical, it's the beachhead, and it's a huge market. As Lynn said, it's 75 million people. Every time you pick up a paper or listen to the news, it's the economy is terrible or jobs are terrible. What we did was also, because of Lynn's background, we focused on food service, hospitality. So the idea was then it was originally built as a site called the Booking Sheet. And the idea was to have a network of people who waited tables, bartended, worked in the catering industry, so they most likely were doing something else professionally, and then started to do something with, or working events on the weekends to help make ends meet. And we admittedly got lucky with the domain name and started to think beyond that, just that one beachhead. So we're focusing on that one beachhead right now. We have a lot of sort of very interested people here in New York City who are sort of the higher end of the catering hospitality world, who are sort of chomping at the bit for this right now. So the bottleneck has actually been me as the sort of the primary developer on it. So we've tried to, occasionally we put me in a suit or jeans, but usually I'm locked away in a dark room writing software. But so we're focusing there.
So you wrote
I wrote the whole app.
Wow, that's pretty cool.
Thank you.
It's really bootstrapped.
Yeah, I mean, this was started out of our house. We've
And our marriage has survived.
So I wanted to, let's pick up on that. One of the kind of rules, the unwritten rules in the venture capital business that I was taught 25 years ago when I first started is don't invest in husband and wife teams. And
I totally disagree.
I'm not sure it's good advice, because I've actually seen a couple of husband and wife teams work very well. But one of the problems with husband and wife teams is that as the company scales, one person has to be the boss. And then the other person becomes a member of the management team. Then you get other members of the management team. And the problem with a husband and wife team is that they can have the management team meeting, whenever they want, and the other people aren't in it. And so it does create some interesting problems. I think at the stage you're at now, awesome model. But if you got this into a very big business and you needed to scale and bring other people in, it will cause you problems.
Tim, we've had this long discussion, and we've identified this. I turn over the reins at that point, and I'm very happy to find someone who can do my job for me, just for the sanity. I think it's for the good of the company. I think it's good for the investors, and I think it's in the long term good for the marriage to disassociate a little bit.
We've struggled with this a bit. Lynn's background is marketing, mine's technology, so there was sort of a good fit there. We've hidden this. We were just accepted into First Growth Venture Network. So our first meeting was last week, where we basically went in and pretended like we weren't married.
I don't think that's a good idea.
Yeah.
And it failed. And to the point where guys were like, you're jackasses for doing that. You're going to be found, and just stop. You guys work well together. We were high school sweethearts. We dated for, Google it. There's a New York Times thing about us. It's it's sort of the cheesy story, but we've known how to. We've been married. We've been boyfriend, girlfriend. We
thought this was like.
Thank you, Dr. Phil.
This is Oprah, right?
Yeah, exactly.
Great.
So we sort of,
and we worked to the full together. So we've had this experience.
So what we've done though is we've clearly we have an org chart in the office at home that Lynn is the minister of the exterior, I'm the minister of the interior. I work on the technology, the build, the fundraising. Lynn works on marketing, PR, and things like that. And so right now we have a very clear delineation of who's who. And it sounds robotic, but we're say like meeting times happening now, and then we know at some point we're going to.
So moving on from this, you didn't really answer my previous question. Maybe it was too abstract. Okay, how are you getting companies to list jobs
with us?
Yeah.
It's a multi-pronged attack, and we've started by doing some tests here in the city. We actually did some 10-10 wins ads when we launched on Labor Day, to phenomenal response on both.
Define phenomenal.
With every spot, we got 800 new visits to the site.
So
both employers and employees, because it was a dual-sided message.
For us, every time the ad ran, we would get about 1,000 hits or 1,000 visits. Of the 1,000 visits, on the radio spots, we get about 25% conversion rates. So this was a test.
I think you're missing the answer that Tim wants. The answer is they're aggregating. Okay, so in addition to
That
allowing
was
people to
gonna be the
list
second part
at
of my question.
hourly, they're aggregating Craigslist and a bunch of other sites.
Right, and that is
And that was the part I was getting
That was
to.
the answer.
No, but that was the part I was getting to.
We're
And-
bootstrapping by piggybacking off of existing stuff. We're sucking it in, and that will give us at least one half of the plausible equation. So now all we have to do is get users to come, and or the other way around,
or the other way around, and
one of the two. But you can't sort of say, well, we're going to kind of ask them both in at the same time, because it's very hard to get both sides to show up.
What we have found is we've found more success in bringing the end user, the job seeker, on, and by bringing in those feeds is we have in addition to our hourly feeds, we have Indeed, Craigslist, and Juju. When someone replies to those jobs, it is a hourly profile that they're sending out. So for every job that they're sending out, they're in fact grassroots marketing us to those employers. That this comes from it might be a Craigslist job, but your response is coming from hourly, and that's going to happen again and again and again. And as they see this is a more dynamic, more user-friendly experience for that employer, they're just going to set up their profiles, hopefully, on hourly.
So I have one more question again. If you
go ahead, Tim.
We can probably run a little long because we're at the end of the day, right?
Great.
But why now? I mean, there have been job sites online now from pretty darn early in the internet. It was one of the first areas that we saw sites. Why no focus on hourly before now?
I think certainly the economy was as such. People were focused on the full-time position, and there were still classified ads and job bulletin boards at the grocery market, and people who were looking for hourly employment were looking in that fashion. With, I think, the advent of Facebook and LinkedIn, I think it has made the internet a forum where people feel more comfortable putting personal information out there and connecting in that manner. I don't think that manner existed before, where they would see a picture and a background and a bio and ratings on themselves and things of that manner that make that an acceptable format for finding employment. Social media is the fastest growing way to find employment.
Who pays you?
Who pays?
Yeah, how do you get paid?
The employer pays, a monthly subscription service, low barrier to entry, about $15 a month. Mm-hmm. The users are free, but they have premium products. There are background checks, the ID verification, galleries.
So how many employer ads do you need to have in order to be break even?
How many memberships?
Yeah.
Not very many. Consider how it's been bootstrapped so far. Mm-hmm. We probably need
we're
200.
As they say, capital efficient.
So you don't need any VC money anyway.
No. To grow it the way we want to grow it, we do. But to break even right now, we need about 200.
I think one of the answers on the hourly thing is that obviously an employer can't afford to pay as much to hire an hourly worker as they can to hire a full-time worker. Yeah. So it's a lower cost or lower value proposition to the employer. The $15 a month is tiny, right?
Tiny.
So you're playing at the low end of the market.
Well, they're also, in addition to it being a low, and some of these jobs are $8 an hour jobs, so they cannot spend a lot of money to get this person. The churn is also incredibly high. People go through these employees on a very quick basis. So what we're doing is a monthly subscription where people can post as many jobs as they'd like, and the idea is to keep them in there for 2, 3, and 4 years because there's this constant motion in the industry.
Yeah. I mean, obviously, Craigslist has shown that you can have a large listing business with a relatively small number of employees. Craig used to sort of show this slide. I think they were the 7th most trafficked site in the internet. This is probably back in 2005, and they had like 23 employees.
It's a dream.
But the fact is, though, it's like it'll work if you get to scale, and that's going to be the challenge.
Absolutely.
Yeah. Any other?
Nope.
All right. Thank you very much.
Thanks so much.
Thank you.
All right. Thank you. And we got to do a wrap here. But any last comments, Fred, on any of the companies that we didn't have up here? And I just again want to remind you, we picked companies that we thought would make for the most interesting discussions. So the startups that weren't picked, it's not a vote on their quality. I think you guys, there were an amazing set of startups there.
Well, I guess a couple thoughts on that. One is I thought the overall quality of the companies in this event was higher than I've seen in a lot of events that I've done like this. So it was really quite good, number one. Number two, I thought that the way that you kind of combined a kind of a startup judging kind of event with kind of an expo event allowed everybody to kind of play venture capitalist, and that was fun. And I thought that the idea of sort of combining those two things is way better format than just having a bunch of people up on stage judging.
All right, well, thanks. Anyway, I hope you guys enjoyed it, and let's hope we see a bunch of these companies funded and delivering their products and making great stuff for us. I really hope a bunch of these companies get off the ground.
Definitely.
Yeah. All right, and we may be following up with some of them, in fact. All right, thank you.
All right.
Thank you very much. And thanks a lot, Fred, for doing this.